we grow faster than the industry grows. You don't do that by being less risky. We may pick where we take risk. So every day we have a $900 billion balance sheet out to our capital markets trading clients, $900 billion. Every day we have $1 trillion plus of loans outstanding. We provide trillions of transactions a day. So the idea is we take a lot of risk. What we don't do is reach to parts that we think the risk reward, especially with our brand on the consumer side, can't support it.
But are you going to look at alternative investments? Are you going to redirect towards digital investments, alternatives, those sort of things?
So alternative investments are a major practice. We have about $4 trillion investment assets, of which 10 or 12% are in alternatives today that are for our clients. We do not invest as a principal and things like that. But then if you think about in the digital space, the cryptocurrency and all that stuff, you have to separate out the transactional question, which is a stable dollar coin, transactional currency. If it's made legal, for lack of a better term, we will be able to drive that, and you'll see the banking industry take a position in that.
On this question of the shifting nature of capital,
yeah.
For a traditional bank, where there is a greater role now for private equity, and indeed the very battle between IPO, you go public IPO, private equity, or otherwise. How are you managing that?
Well, if the environment for operating as a public company improves under a new regime in the SEC, you'll see more companies go public. And we expect a big IPO push, not only because the private equity firms have to put the companies out because they've been sitting on them for a while, but importantly, if the burdens of being public come down a bit, you'll see more companies get out.
Which burden do you think has been most burdensome?
The amount of disclosure and regulation for a smaller company, where people understand the risk is going to be higher if they invest in it, if they disclose those risks, as opposed to trying to regulate those risks from a disclosure standpoint into the company.
So are you?
Why are there several thousand less public companies today than there were years ago?
It's startling. It's startling.
People say it's private equity, but it's also the burdens of being public. We're a big company. We can have thousands of people in our finance function doing the disclosures, but you can't bring that downstream. And that, where I think you'll see some both legislation and rules in the SEC to move private companies into the public domain.
Have you had CEOs come to you and say, look, Brian, I'd love to go public. Public companies, what American capitalism's all about, but I just don't want the headache. Quarterly reporting, all the data. I just don't need that.
There are times at the depths of the financial crisis, my predecessor said, let's take it private, because at the end of the day, that was part of the public, because you get whipped aside. But the ability, the U.S.'s capability of raising capital for companies, not only in the private space, but importantly in the public space, is unique in the world, and that's what provides the resiliency for us to grow faster than anybody else, not numerically, but size-wise.
Choose your weapon of choice. Which color?
Well, we're Bank of America, so we have to choose red. Spend a lot of money on that.
The next 4 years in one word.
Right.
You can write as big, as little as you want. Ooh.
Well,
enthusiasm.
That's what our clients feel, and you see the small business enthusiasm come up. You see the statistics we keep. So they're worried about all the parade of horribles that you can imagine. They're worried about inflation, they're worried about getting employees, but they're more enthusiastic because the regulatory burden in our country, I'm talking about US-centric now, in our country the regulatory burden feels like it's going to be pushed back to the middle. And we have given the advice to the last administration, you have to lower this. Small businesses, $30, $50, $100 million companies are dying under this burden. They don't have the staff and the capabilities. And so their enthusiasm is, okay, it's going to stop getting harder. It may get easier, and if it gets easier, they're a backbone of American growth.